man. So Bitcoin is carefully poised ahead of what is going to be a critical week for crypto. We've got the much anticipated CPI reading. I'm going to explain exactly what we're expecting from that. We've then got the ETH Merge. I'm going to be showing you how I'm playing out my trade on Ethereum during this process. Plus, we're going to look at what is most likely here because we're carefully poised at this critical level. Could Bitcoin start getting up to some more interesting levels, or are we more likely to head back down for another dip below 20,000? We're going to analyze the key levels. We're going to look out for what is most likely and what I'm doing in this market. Smash all the likes. Don't forget to subscribe. As always, check out the links in the description to BYBIT or BitGet should you want to buy any crypto. Now, as you can see here, some real strength here from Bitcoin. Ever since we bounced off that 18,700 level at the bottom of our channel, we've had a direct run through, and now we have now gone back above on today's candle the 22,000 level. Remember, I said we need to get above this 22,000 level and hold above it before trying to mount our attack at what is going to be the neckline of our W pattern. I'll share that with you shortly on the weekly chart, but we are creating an important W pattern which we want to break out from to the upside. That is going to give us our bullish scenario. I'm going to share with you the exact price target that could deliver. At the same time, we have to be very cognizant that if we don't post a higher high and we turn over from here, we could be visiting a next lower low back down below those 18,000 levels. So we need to keep an eye on the technical levels. And guess what it's going to be based on? Some fundamental catalysts which we've got coming up this week. No more important than the CPI reading. Okay, so what is it we're expecting from the CPI reading? Everybody's talking about the CPI reading, but what is it we're expecting, and what do we need this number to come in at for the markets to feel confident? Now remember, there's two parts of CPI. You've got your headline CPI, and then you've got your core CPI, so there is that nuance to look out for, but I'm going to focus on the headline CPI for the understanding of this video. Now, in the previous reading, on the July reading, why did we get some excitement in the market? We got some excitement in the market because we notched down from an all-time high of 9.1 down to 8.5. So the market got excited that we're seeing a trend in the right direction. But what did Jerome Powell come out and say? Jerome Powell came out very hawkish and put the market back in its place a couple of weeks ago at the Jackson Hole Symposium by saying, no, I need to see consistent improvement in CPI in order to even think about pivoting. So what happened was, when this happened, when we went from 9.1 to 8.5, the market went ahead of itself and started rallying. And that's why we saw Bitcoin go to that 25,000 level, because they thought, oh, the Fed's going to pivot. That's going to be the last 75 basis points we're going to see. Now the market understands that, no, that's not necessarily the case. You can see 90% of the market are pricing in that 75 basis point rate hike, and only 11% are expecting a 50 basis point rate hike. So it's safe to say the market is expecting still a big rate hike on the 21st of September next week. But there are a few edge case scenarios where we could see a different rate hike, and that's what I'm going to explain now. If inflation really does take a dive, really does go all the way down, I mean, we're talking low 8s, maybe even with a 7 in front of it, with a 7 handle, then maybe you could have an argument that Jerome Powell needs to reevaluate, and instead of damaging the economy, just slow down his rate hike and go down to 50 basis points, right? That is if that happens. If we get a crazy high reading, if we go back up to 9.1 or even beyond 9.1, can you imagine, guys? The markets would tank, and Jerome Powell may need to put 100 basis points on the table. So those are your edge case scenarios. More likely than not, markets are expecting something like an 8.3, or even if it went slightly to the upside, 8.7. I don't think the markets will be happy that it's gone back up, because remember, last time we fell from 8.5 to 8.3, then we notched back up to 8.6. I don't think the market will be too happy if it notches back up, but even then, I think it will stick to a 75 basis point rate hike. So my view is, if we get a moderate decline, or even a slight uptick, we'll stick to 75 basis points, and Jerome Powell will continue with his game plan. I'm not expecting a pivot until the November meeting, okay? Our next FOMC meeting is September the 21st. We know that next week. But the one following it is November the 2nd. And that's personally, if everything continues to go the right way and CPI inflation starts to show an improvement, I expect a 50 basis points in November. Okay? And that could get us back potentially starting to cut rates by early 2023, within the first quarter, or maybe just into Q2. So that's a roadmap we're looking at. So really critical CPI reading. We'll look out for this tomorrow. We'll cover it live on the channel. Make sure you've hit up the like button. Make sure you subscribe with the bell notification on so you don't miss it. and we'll see how the market reacts to that. Safe to say that this market rally, which we're seeing a nice move here on Bitcoin up to that 22,000 level, is happening even though 75 basis points is priced in. So the CPI would have to be quite bad for the markets to fall now, because the markets at this point, and this can change by the way, but before the meeting, before the CPI reading tomorrow, has priced in 75 basis points. In other words, unless that CPI reading is really, really bad, the market shouldn't dump too hard. Okay, now, what's our next catalyst? Our next catalyst is this. When are we going to merge, right? When merge? So we're about just 2 days away, depending on which calculation you want to take. It's 2 days away from this ETH merge. Now, obviously, it's done based on a specific block number, and therefore it's not time-based. It can vary, right? So we need to wait for this block number to happen potentially within the next 2 or 3 days there between those date ranges. We'll be looking out for the ETH merge. Now, what are we expecting from this ETH merge? Well, if we take a look at Ethereum on the daily chart, what we can see is we got this really nice break of trend. And this is a break of trend we covered here on this channel. So congratulations if any of you took this trade. You'll be doing really well on this trade, on this breakout of trend. And now for me, I'm looking for an opportunity to get out of this now. I wouldn't want to still be in this trade. And I'm looking to, before the merge, get out of this. Now, why am I doing that? Loads of people say, you crazy. And yes, maybe it will pump and I'm crazy. But I know that within any of these types of events, any of my short-term trading positions, I want to be out. I want to ride the hype before it, and then I want to get out. In terms of my long-term portfolio, yes, I've got loads of Ethereum. I'm holding on it. I'm sitting on it. I'm dollar cost averaging, and I'm not touching it. That's fine. That's staying there, and I'm holding that for the long run. So it really doesn't matter to me either way. But for the little bit I put into this trade, which I'm trading up here to the upside, I am looking for an active exit position, okay? So remember, anytime there's these kind of big events, whether it's a Coinbase listing, whether it's a conference, whether it's a new feature upgrade, whether it's a fork, always, more often than not, you see buy the rumor, sell the news event happen, where it becomes very anticlimactic. And that is what we're expecting here on Ethereum. Now, I could be completely wrong, and it can go really smoothly, and it could really pump. But the probabilities do stack up against you. And as a professional trader, you want to stack up those probabilities, right? There are more things that can go wrong or annoy the market than can go positively, particularly when you've got a whole bunch of macroeconomic conditions weighing in as well. So that's where I stand here with Ethereum. You can see Ethereum versus Bitcoin chart as well, continuing to really outperform Bitcoin as we were expecting heading into this merge. Now, let's get back into Bitcoin. What are we seeing here? We got our daily close above 22,000, which is really good, right? We wanted that back above this channel. We're now above this channel here, as you can see, and that is showing some really good strength. But what I do want to show you is let's head on over to a clean chart. Let's bring out our Bollinger Band. And what we will be able to see on our Bollinger Band is we have a little bit of a warning. Let that just load through. There we go. We've got this warning. We've now moved very far from the bottom of our Bollinger Band up to the top of our Bollinger Band. Now I will be expecting, if we can close above, we can get a nice big move here to the upside. If we don't and we get rejected, then I'm going to be looking for a potential little retracement, at least to the middle line, that red line, if not even down to the bottom, okay? So that's something I'm looking out for here on the Bollinger Band. If I pop the Bollinger Band away and bring out the VPVR, I want to share this with you as well. And that is on the VPVR, what you can see is we are now breaking through a key level here. So you can see once we get through that 22,000 level mark, things are getting a little bit easier here in the Bollinger Band, but you will see resistance coming in here, right here, at around the 22,500 level, okay? You can see this pivot point here. Always look to the left, guys, remember? That pivot point there is going to provide a little bit of resistance, and then we can work our way up to this green line, which is a really important line at 24,500. Now, why is this line so important? Let me explain. Let's pop away the VPVR. Let's head into the weekly chart, okay? I've got the weekly chart in front of us now, and what do we see? That green line is the neckline of a potential W pattern here on the weekly chart, okay? And this is what we want to look out for. We had a big move to the downside. We create a bottom. We bounce. We get rejected. We bounce a little bit more, and we head towards this neckline, creating a double bottom or W pattern. This is going to be the bullish scenario for Bitcoin, and you can see the technical move price target brings you to about 31,000, and this is the bullish case here, and you can see that brings you well into your weekly EMA ribbon. If Bitcoin can play this scenario out, and it won't be easy, but if it can play this scenario out, if macro conditions go in its favor in terms of CPI, this could be a really powerful move, and it can get us well on our way to trying to get ourselves out of this rut. But I have to maintain, guys. I have to maintain. Let's not get too carried away. We are in the control of the bears. I know I'm boring when I say this, but it's just the reality, and that's what you're going to get on this channel. If you want Moon Boys, you guys know where to find those channels. There's plenty of those who will tell you we're going to go to 50,000 in the next couple of days. You can watch that at your discretion. But for me, the bears are in control. We've seen these scenarios play out where we've had a movement in, we've gone up. Now, until we create that higher high, until we get through that neckline and with some good volume, I'm not too excited about this move just yet, but we are forming that move. Now, the other thing which is a little bit worrying is everybody is calling out this pattern. So I always get a little bit worried when everybody's watching the same pattern. More likely than not, we're going to see a little bit of resistance. So a lot of work to do here. The tail behind us could be a really good CPI reading. If a really good CPI reading comes in, this could be the catalyst for us to start moving, getting risk on, and starting our move to the upside. Finally, let's wrap things up here with the dollar index. We've got to monitor the dollar index. It's the dollar index which, when it falls, gives us the opportunity to run on Bitcoin. As we can see, we are set up for a nice couple of weeks to the downside for dollar index. So if we get an improving inflation picture and things start to improve from that perspective, then we could see dollar index actually come into its weekly EMA ribbon. And that can give us a couple of weeks of red, even if there's 1 or 2 green weeks in between there. But if the general trend over the next couple of weeks is down to come collect some support from its EMA ribbon, those couple of weeks slash months could be periods where Bitcoin does pretty well. But still, you'd have to be silly to not notice what the greater trend is here. And the greater trend continues to be the dollar index on a weekly time frame here, showing impeccable strength. And until we actually start showing some weakness into our EMA ribbon, we cannot proclaim to have a long-term run on Bitcoin. So there you have it, guys. There is an update on what is going to be a really, really important week. We will be covering that CPI reading, so make sure you're subscribed. Make sure you've got the bell notification, because sometimes when I go live, Bitcoin does not, YouTube does not let you all know for whatever reason. So guys, make sure you're subscribed, notification bell on. Let me know in the comments if you appreciate this type of content. Go watch this really important video here, and I'll see you in the next one.